Welcome to Online Trading Campus and welcome to our unique OTC Futures course. Let's continue with Module 4, Advanced. In this lesson, we cover another strategy add-on called GLOBEX Breakout Bait. In this lesson, you'll learn about what GLOBEX is, the GLOBEX Breakout Bait in specific, and how we use it and combine it with our opening hours trader strategy. We'll talk about how to set up a GLOBEX trap, the trap trading rules, and then we'll wrap it up with some trap examples. Alright, let's get started. Let's start with some history lesson to understand the meaning of GLOBEX. In the mid-1980s, the Chicago Mercantile Exchange, now the CME Group, introduced an electronic trading platform called the GLOBEX trading system. The popularity of electronic trading did not really catch on until the mid-1990s with the introduction of the E-mini stock index futures contracts. Part of the reason for this new style of order execution was for the CME Group to be competitive with its international competitor, the Eurex exchange, which is an all electronically traded exchange. Futures exchanges in the United States had always used the open outcry trading style of trading pits on the exchange trading floors. This required so much personnel to keep the exchange running smoothly, resulting in much higher operating cost. The CME Group had the foresight to see that it needed to have an electronic trading platform if it were to stay ahead of its overseas competition. Futures exchanges were created originally for one specific entity, as we remember from Module 1, the commercial trader. These market participants are very large corporations, usually trading over 60% of any given futures contract's daily volume. Futures exchanges make profits with every contract that is traded. For each contract that is traded by either a commercial trader or a speculator, the exchange collects an exchange fee that is built into the commissions that you pay. When an exchange has very high operating expenses, such as one that trades with trading pits, they must pass this cost on to its customers in the form of higher exchange fees per transaction. An exchange with an all-electronic platform has lower operating cost and can pass these savings on to its customers. This in turn can lure clients away from the exchanges having to charge higher fees. To keep from losing these large commercial accounts, the CME Group introduced electronic trading to its customers. Soon, the futures markets were able to be traded almost around the clock. During the day, orders were filled in the trading pits, and after hours the orders were filled electronically. Originally, the floor traders, so the members of the exchange, would not allow the GLOBEX electronic platform to trade while the trading pits were open. By allowing this, they would not get all of the orders coming to the exchange, which is how they made their money, by being a market maker for all the incoming orders. This would then create two different trading sessions, open outcry and electronic trading. During the day, while the trading pits were open, the market trading sessions was referred to as regular trading hours. Then, once the regular trading hour session stopped, the GLOBEX electronic session, also known as extended trading hours, would trade until about 30 minutes before the next regular trading hour session would open again. Eventually, the CME Group went public on the Nasdaq Stock Exchange. The floor traders could not stop progress, and soon the GLOBEX trading platform was trading simultaneously with the regular trading hour session of open outcry. Today, the majority of all futures volume is traded electronically. The regular trading hour session still trades the most contracts, even though they are all traded electronically during this period. Now, in the GLOBEX system, it's a bunch of computer orders or computerized orders. It could be an algorithm, or it could be us as traders pushing the buy and sell buttons on our computers from home. Either way, they are computerized or electronic trading, and it runs almost 24 hours a day. There's some shutdown maintenance period and the markets are closed during certain hours, But other than that, it's pretty much trading throughout the entire day and night. So the GLOBEX system, it really is a system, not a session, although, just so that you are aware, a lot of traders call it a session. It's not that big of a deal. If someone says, I'm trading the GLOBEX session, you know what they mean. They're trading the electronic overnight hours. But technically, if we want to be accurate, it really is a system. So anyways, another term that's often referred to as the overnight hours or the after hours, the overnight trading session. Now that's mainly in the US, the United States overnight session. So you may hear that terminology a lot. So if someone says I'm trading the overnight session, what that means is they are placing trades electronically using the GLOBEX system, but they are doing it at a time when the regular trading hours are closed. Some more detailed information about the GLOBEX session is, you've already known, it's electronic trading. It's also known as the extended trading hours or overnight session. But some more specific things that you want to know is for the S&P, Nasdaq, Russell and Dow Jones, the GLOBEX or overnight session begins at 6 p.m. Standard Eastern Time and it ends at 9:30 a.m. Standard Eastern Time. Now, just so there is no confusion here, technically GLOBEX is a system that trades around the clock. So you could place a trade during the regular trading hours or the old pit session hours, and technically it would be still in the GLOBEX session because it is traded electronically in the GLOBEX session or system. But for the purpose of keeping this simple for us, so that us traders can identify regular trading hours and extended trading hours, we have to give it some time slot here. So the extended trading hours starts at 6 p.m. Standard Eastern Time, goes all the way around the clock till 9:30 a.m. Standard Eastern Time. And at 9:30 a.m. for the equity indices, that would start what's referred to as the regular trading hours or the day session. And that would continue until 5:15 p.m. Standard Eastern Time, when the new day would officially start. Alright, so bottom line here, we are looking from 6 p.m. around the clock down to 9:30 a.m. That is our GLOBEX session or system hours, the extended trading hours that we are going to be focusing on. That's going to lead us into what is the GLOBEX breakout bait. And this is really starting to get into the strategy portion of this here. So first we talked about what the GLOBEX is. Now let's talk more about the breakout bait, or in other words, the trap, and this will really start to set it up. During that GLOBEX, the extended trading hours, the overnight session, there are highs and lows that are formed during that time. So you can see on the chart here, we have a high that's set in and a low that's set in both during that overnight or extended trading hours. Now, as the day session begins, most of these traders out there, they are aware of these GLOBEX highs and GLOBEX low price areas. So we are going to start to use this as a way to trap a lot of the novice traders out there. So for right now, just understand, we are really just going to be looking for the high and the low that are set in during that GLOBEX trading period, the extended trading hours. Now, when price breaks above the GLOBEX high during the regular trading hours, so the market is opened, the regular trading session has begun, market is trading, and it trades above the high of that GLOBEX price point. A lot of traders out there become bullish and they will either buy a breakout or get ready to buy a breakout. So they start buying above the GLOBEX high, in other words. Now, when this happens, when traders buy above that GLOBEX high into a supply zone, that's what we want to see. The bullish or bull GLOBEX trap is set. And from there, we look to sell from those breakout buyers. Again, key thing here, when it happens into a supply zone, that's very important for us. Remember, we don't want just to short anywhere, we want to short in a supply zone. So just to recap here, price breaks above the GLOBEX high into a supply zone. then we start looking to take that short trade. And we would set all this up ahead of time. But that would trigger our entry to short. We would be shorting from those people that are buying the breakout above the GLOBEX high. Now, it works both ways here. When price breaks below the GLOBEX low, so we are looking at the lows now, from the low of that extended trading hours. Once the regular trading session begins, again 9:30 AM Standard Eastern Time, once price breaks below the GLOBEX low, these traders become bearish and they start planning for breakouts or taking breakouts. In other words, they are shorting. So if they short into a demand zone, the bear GLOBEX trap is set, and that's where we would be looking to buy from them. So you can see on this chart here, price trades below the GLOBEX low right into rally base, rally demand zone, and that would have been a beautiful trade for us as supply and demand traders. And not a good trade for those short sellers right below that GLOBEX low, and that is the trap. Alright, so let's talk about how do we set up this trap. How do we make it easier for ourselves to place this trade? Well, the first thing that you want to be aware of is this is really the whole GLOBEX trap here. It's really a setup for the equity indices primarily. Could we use it in other markets? Sure, we could try and see if it works well in other markets, but really this is mainly in the equity index type of play here. So the S&P, Nasdaq, the Russell, the Dow Jones, those are the markets that we want to focus employing this particular strategy. All right, let's take it a little more detailed look here. In this chart here, you can see that we have the regular trading hours or the day session, the day hours. Now keep in mind, this is all in Standard Eastern Time, so your trade station chart setting has to be set to exchange time. So the chart that you see there is a day session of one particular day. Then once the day session is over and we begin the GLOBEX overnight session, the extended trading hours, it would look something like this. During that time of the extended trading hours, we would form a low and price would form a high. So we would mark off, there is the low and there is the high. Then on the current day, here we are, the regular trading hours or the day session begins again, and we can see that here. So really three parts to this here: the prior day, the GLOBEX high and low, and then the current day. Now during that GLOBEX high and low, one thing that we want to look for is, well, look at the range here, the high to low range during that extended trading hours. Sometimes you get really big ranges, huge ranges overnight, and that's typically caused by some big event either in Asia or in Europe that's causing a strong drop or a strong rally in price. But a lot of times you'll get a very small or tight range too. So the ranges will vary from day to day. Now, there's something else that you want to be aware of, and what I would suggest is that you write this down or have it somewhere handy that you can use this. And that's the steps to identify the GLOBEX traps. So we are going to walk through this step-by-step process. Step 1, identify the GLOBEX opening time, that's 6 PM Standard Eastern Time on your chart. Step 2, identify the GLOBEX close, that's when the regular trading hours begin. The day session begins at 9:30 AM Standard Eastern Time. Step 3, identify the GLOBEX high, that's the highest price that was made during the extended trading hours. Step 4, identify the GLOBEX low, that's the lowest price that was made during the extended trading hours, the overnight hours. Step 5, identify supply zones above the GLOBEX high, if there's any. And there may not be any, and if there's not any good quality zone or any zone at all, so be it. That's fine, we are not going to take that trade obviously. Step 6, identify demand zones below the GLOBEX low, also if any, and I say if any, but really that means if any good quality zones. Remember, we always want to match this up with our total overall strategy. Low in the location, high in the location, with the trend and so on. And then step 7, prepare to take those trades that meet our strategy rules. Set your trade, stop, entry, target, position size, things like that. So let's walk through these here one step at a time. Here we go. Step 1, you see the chart example. Identify the GLOBEX opening time 6 p.m. Standard Eastern Time. Step 2, identify the GLOBEX closing time 9:30 a.m. Standard Eastern Time. Step 3, identify the highest price that was formed during the GLOBEX session, which you can see the arrow pointing to it here. Step 4, identify the lowest price point that was formed during that extended trading hours. Step 5, identify any supply zones that are above the GLOBEX high that are located in your time window of opportunity from 8 a.m. to 11 a.m. Remember the previous lesson, your 3-hour time window of opportunity. Now we can combine both strategy add-ons. Your lower time frame high quality zone has to be located in your window of opportunity, and we get ready to trade those, if any. Remember, if there was nothing there of any good quality, then just pass on that trade. Same for the demand zones onto Euro in step 6. Identify any demand zones that are located in your time window of opportunity from 8 a.m. to 11 a.m. below the GLOBEX low. If there was nothing there of any good quality, then just pass on the trade. And step 7 would be to go ahead and prepare the trade that meets your strategy trading rules. Alright, speaking of rules, here are some rules for you. GLOBEX trap trading rules, let's walk through this here. The bear trap, step 1, we call this to trigger price breaks below the GLOBEX low. The mass reaction, again, traders become bears and they plan for a breakout, or they plan to sell, or they do sell to the downside. And the trap condition is if they sell into a demand zone below that GLOBEX low, that's right where we want them, where we trap the bears. So what's our action? Our action would be to buy from that mass reaction of sellers right into a demand zone that is located in our time window of opportunity. So that is the bear trap. We are trapping the bearish traders. The bull trap, just the opposite really. Price breaks above the GLOBEX high, they are bullish, that's the mass reaction. Traders become bullish, hence the bull trap, and plan for a breakout to buy, or they do buy. Step 3, supply zone above GLOBEX high, that's the trap condition. So if they are buying into that supply zone, what do? That's step 4, we sell or short into the mass reaction for those buyers. Alright, let's walk through a few different examples here. Some real trade examples, alright? The first one that we see here, we have a chart with the GLOBEX high, GLOBEX low. That's our extended trading hours. Your GLOBEX range from high to low, and price breaks out above the GLOBEX high. So again, think what's our play here? Well, when price breaks above the GLOBEX high, novice traders, they become bullish, they start to buy, they buy above that, that's the breakout trade. But look to the left and you can see highlighted over there on the left, we have a supply zone that was created in our window of opportunity from 8 a.m. to 11 a.m. and that is where we want to sell short. And you can see this one worked out quite well. We have a very strong move to the downside there. Alright, here's a demand zone. So this one would be a bear trap. Here's our GLOBEX high to low. Here price breaks below the GLOBEX low right into a demand zone, off to the left over there, and we have a nice move to the upside. So there's your bear trap. So again, wait for price to trade below the GLOBEX low right into demand zone that was created in our window of opportunity, and that would set up your bear trap. Here's another example. GLOBEX high and low highlighted there. Now take a look at this one. Similar scenario in that you have the GLOBEX high and low. Price broke out above the GLOBEX high. We did have a supply zone off to the left over there, but look what happened. It kept going higher. So bull trap did not work. Why? This is where you really need to plan this out ahead of time. And this is important that you understand this. Just because you have a strategy doesn't mean it's going to work every single time. That's just trading. It doesn't work every single time. Unfortunately, that's just the way it works. So we have to ask ourselves, Why did this trade not work out? What do you think are some reasons why? Well, that's going to get back to our total overall strategy. We would ask ourselves, well, when we want to short here, was it low in the location? Was it high in the location? Was it in equilibrium? Was it a good quality supply zone? What was the trend? So that would play into effect. So we want to go back and look at this when we set this trade up initially and really ask yourself, does this meet the requirements of a good trade? Am I high in the location or very high in the location? If so, then this trade has a much higher chance of working out compared to if it's very low or low in the location. So keep that in mind when you're looking at these trades. Ask yourself, where am I at in terms of location? What's my trend? What are my zone qualifiers? Is the zone good or not? Things like that. Remember, we are looking for the total trade here, the total package. Not just because price breaks above the GLOBEX high, we short. It's a lot more to it than that, obviously. And that's why I wanted to show you this example here to get you thinking about it ahead of time. Alright, let's summarize the rules. What is the ideal zone? It is a zone that is outside of GLOBEX high and low and created between 8 AM and 11 AM. Hence, we want to trade supply zones above the GLOBEX high or demand zones below the GLOBEX low that are created between 8 AM and 11 AM for increased probability of success. What is a bad zone? A zone that is in between GLOBEX high and low. More summary here. So during the GLOBEX session, highs and lows are created. As soon as the regular trading hour begins, most traders will look at these GLOBEX highs and lows as support and resistance areas. As soon as the price breaks through the GLOBEX low, most traders become bearish and plan a breakout trade to the downside, a short trade. If there is a demand zone underneath the GLOBEX low, bears will be trapped as we would be buying from these sellers. The bull trap is the exact opposite from the above. And this is applicable to S&P 500, Nasdaq, Russell, and Dow Jones. Alright, perfect. That's it for this lesson. In the next lesson, we will go through each market and I will show you how you can display only the time of the day where banks and institutions are most active. Stay tuned for the next lesson.